Welcome to Part B Mastery, Costs, Premiums, and IRMAA, the second module in our 2026 training series for Bedrock Group agents. In this video, we'll cover the standard costs of Part B, the income-related monthly adjustment amount, and strategies for helping clients navigate IRMAA appeals. This module covers three critical blocks. First, the standard costs every beneficiary pays for Part B in 2026. Second, the IRMAA surcharge that impacts higher income beneficiaries. And third, the appeal process clients can use when their income has changed due to a qualifying life event. Mastering all three makes you an indispensable resource for your clients. Let's start with the baseline. In 2026, the standard Part B monthly premium is $202.90. The annual deductible is $283. After the deductible, Medicare covers 80% of approved outpatient services, and the client pays 20% coinsurance. Remember, Original Medicare has no annual out-of-pocket maximum, which is why supplemental coverage discussions are so important. Now, what is IRMAA? The income-related monthly adjustment amount is a surcharge added to Part B and Part D premiums for higher income beneficiaries. About 8% of Medicare beneficiaries are affected, while 92% pay the standard premium. IRMAA is not a penalty. It is an income-based adjustment. The 2026 trigger begins when modified adjusted gross income exceeds $109,000 for individuals or $218,000 for joint filers. Here is how the income determination works. It is a 2-year look-back. Social Security uses your client's tax return from 2 years prior to set the current year's premium. So, for 2026 premiums, the IRS provides Social Security with the 2024 tax return data. This means income earned in 2024 directly determines what your client pays in 2026. This is a crucial detail for planning conversations. The IRMAA calculation is based on Modified Adjusted Gross Income, or MAGI, equals adjusted gross income plus tax-exempt interest income. That tax-exempt interest piece surprises many clients, because even municipal bond interest counts toward the IRMAA threshold. Help your clients understand that MAGI, not just taxable income, drives the surcharge calculation. Let's walk through the IRMAA tiers. At the baseline, individuals earning up to $109,000 or joint filers up to $218,000 pay the standard premium of $202.90. Tier 1 starts above $109,000 for individuals and adds a surcharge, bringing the total monthly premium to $284.10. Tier 2 raises the premium to $405.80, and Tier 3 brings it to $527.50. Continuing up the brackets, Tier 4 brings the total monthly premium to $649.20, and Tier 5, the maximum penalty tier for individuals earning $500,000 or more or joint filers at $750,000 or above, the total monthly premium reaches $689.90. That is more than 3 times the standard premium. These numbers get your client's attention. Now here is the good news. If a client's income has dropped significantly since the tax year used for the IRMAA determination, they can request a reconsideration. This is what we call the pivot. Now, clients do not have to accept the surcharge if their financial circumstances have changed materially since the look-back year. What qualifies as a life-changing event for an IRMAA appeal? The Social Security Administration recognizes several categories. These include marriage, divorce or annulment, death of a spouse, work stoppage or work reduction, loss of income-producing property due to a disaster, loss of pension income, and receipt of an employer settlement payment. If your client experienced any of these events after the look-back tax year, they may qualify for a reduced premium. The appeal process has 3 steps. Step 1, the client completes Form SSA 44. Which is the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. Step 2, they gather supporting documentation such as a tax return, letter from employer, or divorce decree. Step 3, they submit the form and documents to their local Social Security office. Processing typically takes 30 to 90 days. Coach your clients through this process to position yourself as their trusted advisor. The IRMAA defense strategy comes down to controlling 3 variables. First, manage the MAGI inputs by helping clients understand which income sources count. Second, time income events strategically to avoid unnecessary threshold crossings during look-back years. Third, when income does drop, file the SSA 44 appeal promptly. Agents who can guide these conversations differentiate themselves and build long-term client loyalty. That wraps up Module 2. You now understand the standard Part B costs, how IRMAA works across all 6 tiers, and the appeal strategy for clients whose income has changed. In the next module, Part B Mastery, the IRMAA Playbook, we'll dive into actionable field strategies.